Webuy Global WBUY has recently regained its Nasdaq listing after executing reverse stock splits and successfully appealing to meet minimum bid price requirements. Operationally, the company is showing impressive growth in its travel verticals, with Singapore bookings up 45% year-over-year and Indonesian travel revenue skyrocketing over 100% in Q1 2025 compared to the previous year. Webuy also achieved its first group-level profit in Q4 2024 and is focusing on scaling high-margin verticals and enhancing its AI-powered platform across Southeast Asia. This operational momentum is a positive sign, but the stock's current price is trading at an astronomical premium over 21,000% above some technical forecast models. Technical sentiment is bullish, but the fear and greed index is stuck in fear, and volatility is high. Forecasts predict a short-term price drop, and models suggest the stock is heavily overvalued at current levels, making it a risky buy. For most investors, WBUY looks more like a candidate for profit-taking or even short selling than a fresh buy right now. Nuvve Holding Corp. NVVE is a micro-cap clean energy company focused on vehicle 2-grade B2G technology. The stock has shown a recent price surge up 25% over the past 2 weeks, with volume and volatility both increasing. Technically, NVVE is flashing some positive signals. It holds by signals from both short and long-term moving averages, and a recent pivot bottom has led to a 32% rally. However, the broader sentiment remains bearish, and the fear and greed index is in fear. Forecasts predict a potential short-term upside, but models also warn of a possible 65% drop over the next 3 months if the current rally fails to hold. Support sits near $1.10, and a breakdown below that could trigger sell signals. While there is a speculative case for a short-term trade, the medium-term risk remains high, and the company's fundamentals are still improving in a competitive, capital-intensive sector. NVVE is only a buy for high-risk traders who can monitor positions closely and set tight stop losses. Siyata Mobile Inc. SYTA has been battered in recent years but is now attracting bullish analyst attention. The sole analyst covering SYTA rates it a strong buy, with a 2025 price target of $17 far above current levels. Broader forecasts predict an average price of $4.09 in 2025, with a high of $8.13 and a low of 5 cents, indicating extreme volatility and a wide range of possible outcomes. Long-term projections are even more optimistic, with some models forecasting a 955% gain by 2050, though these are highly speculative. The company's recent price is around $1, so even the average 2025 target implies a potential 300% plus return. However, the risk is substantial, and the company's fundamentals remain weak, with a history of dilution and erratic earnings. SYTA is a high-risk, high-reward play best suited for speculative investors who can tolerate large